We've seen a nice pop up in gold in 2016, more than 12% move. And in a minute, we're going to bring in Peter Schiff, who says he was not only right about gold, but gentlemen, he was right about everything. Scott, I'm going to toss it to you first. What do you think?
Well, we'll discuss whether or not Peter was right about anything in a little bit. But as far as gold is concerned, it's still a situation, I think, where you want to be buying dips. But we did get some interesting news today. First of all, Goldman Sachs out with a note today saying that they expect gold to be at $1,000 by the end of the year. They expect it to go down modestly each quarter until we get there. It's also interesting that gold buyers tend to step back before we get Fed speak. And also, if you look at the chart of the gold futures, they're strongly overbought with a relative strength index of about 78. That doesn't mean they can't get more overbought or go sideways, but that does tend to be a problem for gold bulls.
Jeff, your take on gold, do you agree? Goldman Sachs saying that we're going to see $1,000 gold. Do you think that's possible?
I don't know if I necessarily agree with that, Jackie. We are seeing the safe haven trade. Typically, on that test in high school, you had an A, B, C, and D choice. Well, right now, there's not a lot of safe haven trades out there. Look at Japan going negative. Look at the 10-year continue to dip. So I think the safe haven trade of gold certainly been illuminated and dusted off since the dollar has weakened. But I don't know if it goes to 1,000. It has such a bid in 2016.
All right, well, let's bring Peter Schiff in then to discuss it himself. Always great to have you on the program. Peter, are you there?
Yeah, I'm here.
Oh, great. Excellent. Okay, so let's talk about gold because we had a $40 move on Monday, and that surprised a lot of folks. As I mentioned at the top of the show, we've seen a bid here in gold up 12.5% year to date. We had 3 years of straight losses for gold, though, to put that in context. So I want to get your take on where you think we go from here. And let's not, talk about 5,000. Let's talk more short term this year. What do you think gold can do?
Well, first of all, gold is now up $150 since the day after the Fed hiked rates. And, the reason that I thought the Fed wasn't going to hike rates at all in 2015 is because I knew that if the Fed did hike rates, it would push the economy into recession that much quicker and cause a bear market in stocks. And so I knew that the Fed would try to save the market or stimulate the economy by cutting rates. And so everybody who was selling gold based on the idea that the Fed was going to raise rates, that was the wrong trade because rate cuts were not sustainable, or rate hikes, because any rate hike would have to be reversed by the Fed. And that's exactly where we are now. Yes, the Fed raised interest rates, but I still think their next move is down. Meanwhile, gold now has to reverse the last 3 years of losses because they were all based on a fantasy of a legitimate U.S. recovery where the Fed could raise rates. And I think that we're headed a lot higher in the short term, in the intermediate term, and in the long term on the price of gold.
Okay, on the subject of the Fed, I think there are a lot of market participants out there that would agree the pace of these rate hikes definitely going to slow down, not necessarily maybe zero in 2016. But when you talk about this notion that the Fed is going to have to reverse the rate hike that it put in place, how does that play out in your view?
Well, first of all, unless the Fed totally capitulates, this bear market is going to be brutal. So if the Fed throws the market a bone, maybe Janet Yellen says something tomorrow that the Fed is considering slowing down the hikes or anything that takes the rate hike or pushes it further into the future, the market will bounce on that. But the bounce will not be sustainable. What we need to stop this bear market is full-on QE from the Fed. Every time the market has corrected since 2008, it's always been the Fed that's made the bottom. The Fed has always saved the market either by cutting rates, launching QE, or threatening to launch another round of QE. So they're going to have to give the drug addicts on Wall Street what they want. But from the perspective of gold, it doesn't really matter what the Fed does. If the Fed raised rates, gold is going up. If they don't raise rates, it's going up more. And if they cut rates, which I think, it's going up a lot faster. And also with the dollar index is at a 4-month low today. It's at a 2-year low against the Japanese yen. But it's going a lot lower because the dollar trade was the mirror image of the gold trade. People were buying the dollar because they believed that there was a real recovery. They thought the Fed was going to be raising rates. That's not true. The Fed can't raise rates. We're going into recession, and so the dollar is going to reverse those gains, which means commodities are also going to reverse. The real reason that oil prices are down, it's not because of a glut produced by fracking, because all commodity prices are down across the board. Agriculture, industrial metals, this is all a dollar story. And as soon as the dollar turns, as soon as these rate hikes are off the table, commodity prices are going to rise, and they're going to take commodity currencies with them.
Okay,
Yes.
let me ask you this regarding the bubble and the situation that we're in with the Fed here. Cycles usually 7 or 8 years if history does repeat itself. That's right about the time that we are now. Do you think the bubble burst this year?
Well, I think the bubble has already burst. The question is the Fed going to try to fill it back up with air before too much comes out? Because this is an election year. And Janet Yellen is playing a game of chicken with the markets. How long can she keep up the pretense that everything is great, that we have a real recovery and the Fed can actually raise rates? The danger is if she waits too close to the election, it's going to be too late maybe to save Hillary Clinton or Bernie Sanders, because she doesn't want everything falling apart that close to the election. She probably wants to try to give the economy some kind of temporary boost early enough in the year so that it's not completely a disaster in November. So it's dangerous, I think, for Yellen to wait. But so far, she's trying to put some distance between the rate hike and the next rate cut, because the Fed is trying to save face. Remember, I said the problem for the Fed was going to be if they raised rates, they would look foolish to have to reverse that and then cut rates. And that's the exact box the Fed is in right now. So she's trying to figure out a graceful way out of this. She's looking to blame the rate cut on some external factor that nobody could have possibly predicted, so they can try to hold on to whatever credibility they have left.
Yeah, and everybody says that she would look so foolish that she would never do it. But, you know, never say never. Scott Nations, do you have a question for Peter?
Well, I do. And Peter, you and I disagree completely on whether or not the Fed is responsible for what we've seen since the beginning of the year. And the reason I think that it has absolutely nothing to do with the Fed is that for the 2 weeks immediately after the Fed's December meeting, where they raised rates for the first time in 8 years, raised them by 25 basis points, for the 2 weeks after that, the S&P was unchanged, gold was unchanged, and the dollar was actually higher against the euro currency for by about 0.75%. And so let's take a look at a specific market, because it's usually easier to distill broad trends by looking at single markets. Let's talk about crude oil, because you say that the collapse in crude oil prices has everything to do with the dollar and nothing to do with production. But I don't understand that, because Saudi Arabia and OPEC in general, they have produced more than their quota for now 20 months in a row. And if they're producing more than their quota, and if we're nearing capacity of storage at Cushing, Oklahoma, and if crude oil is down by nearly 2/3 that over the past year, then how in the world can you say that the crude oil story is a dollar story?
Okay, let me take the first part of your question first, and then I'll get to crude oil. So markets don't immediately do what they're going to do. Sometimes they have a head fake. I don't know if you've ever been a trader, but oftentimes markets do the opposite of what they're going to do initially to fool people. They sucker in some longs, they clear out some shorts. So sometimes that happens. Before you get the real move, you get the head fake, kind of like a running back, juking left and then running right. So that's what the market did. This isn't a coincidence
Well, but
that the Fed raised rates,
do that if
and now
knew,
everything.
But Peter, hang on one second. If somebody knew that the Fed raising rates was going to pressure the stock market, why would they fool around? Why wouldn't they have just sold it on the afternoon of the 16th of December or the next day? Why would they fool around for 2 weeks and let it go sideways?
Because they didn't know that. Remember what the attitude was when the Fed raised rates. It's great. It's not going to hurt the stock market. It's validating the confidence that the Fed has. The economy is strong. People were wedded to this ridiculous narrative, and it fell apart. And, you know, I remember the day after the rate hike, I was on this show, and you guys were making fun of me because the market was up. And I said, give it time. It's not going to happen in one day. I knew the market would tank
Peter,
as a result of what the Fed did.
we were making fun of you because you said it was impossible. You said it was impossible.
You did say it was impossible for the Fed to raise rates.
And you said their next step was going to be QE4.
No,
Peter, you absolutely said that. We can revise history, but we have it on tape.
No, let me tell you what I said. I said it was improbable that the Fed would raise rates because it was impossible to raise rates without pricking the bubble in the stock market and pushing the economy into recession. So the Fed was actually dumb enough to do what I thought they had the intelligence not to do. Yes, it is next.
You said they wouldn't, and that QE4 was next. You said it was next.
I didn't say
we're talking about, guys.
All I said was that QE4 is coming.
We're mincing
Scott,
words
you
here.
You got everything wrong. Stop making fun of me. You said that if the Fed raised rates, the stock market would go up. It tanked. You said the dollar would go up.
That's not what I said, Peter. Actually,
you said gold would go down. It rallied.
Since the beginning of the year, Anthony Grisanti and I have both been saying, often together on this show, sell rallies in both the S&P and in crude oil. So people who have watched futures now and made those trades have worked out really well. But the last time
you
were
think
on,
they made
both
back all the
Jackie
money they
and
lost
Stutland,
from your earlier
hang on,
trades?
both
I don't
Jackie
know.
and Brian Stutland asked you for specific trade ideas that would make money if what you suggested was going to happen indeed happened. And you filibustered and didn't come up with any trade idea other than
look.
That's
Scott,
well, how does that help?
I told
how
people
does
to
that
buy
help
gold.
anybody? Peter, you can
gold
continue to try and scare people into buying gold because you happen to sell it.
Look,
you happen to sell, Peter, you happen to sell gold. So congratulations. You continue to scare people into buying what you're selling. But how about another trade idea that will help our viewers make money if you're right going forward?
Scott, I'm helping a lot more people make money than you are. But let me get back to your other question about oil
Gold's at
and why it's a dollar
it's not
story.
at 5,000, Peter.
Let me ask you this, guys, because we are running out of time here, and I do have to move topics.
Let
Peter,
me finish.
Peter, let me just ask you what your target is for 2016. 2016, where do you see gold going?
Yeah, I'm going to answer the question on oil, though.
Please make it quick. I'm running out of time here.
All commodity prices are down. Okay, all commodity prices are down, not just oil. It's not about production. Production might be responsible for $5 or $10 a barrel. It's the dollar. And when the dollar turns, all commodities are going to turn, including oil.
Okay. Answer my question regarding gold. Can you give me a target for 2016?
Higher. I think once it gets through 1,200,
I need something more than higher.
The next stop is 1,300. Look, it's going a lot higher. I don't know exactly how much higher, but it's going a lot higher. And if the Fed does what I think it's going to do, if they cut rates and launch QE4, it's going much, much higher. It's going to take out the old high. And yes, we're going to get to 5,000. I don't know if it's going to take a few more years, but it's going to get there, and it's probably going higher.